Welcome to TradeTheNBA.com. This is Jonas Reports for the 2nd of October. Let's get right to it. Pop-up day the other day was nice. Everything was good. And then mid-late into the action, we got a beautiful short setup. And boom, we retraced a big chunk of the gap open to start the day, which left everybody who bought the gap upside down. By the time it was all said and done, we could see that that's continued to fade a little bit further from there, retouching the ABM yellow so far. I believe that's been the support. It's at 29.16, low 17.50, so right about there. Not a big shock. I mean, NASDAQ had been looking better as far as readings go, but a lot of this is not so related to America because we talked about this before. The pump up in the S&P certainly is helped by the euro, and once the European budget was turning into a disaster, sure enough, the euro fell of its own weight, and that puts pressure on S&P earnings. So, hey, a little bit lower. No shock there. Not a surprise for some people, too, to realize that, hey, oh, gee, interest rates are rising. Yeah, treasuries are going to show a higher yield, lower price tag that way. And this is an inflationary buster. We've now taken out peaks. No end in sight because a burning economy just is going to burn through a lot of fuel, and you only have a limited production capability. I don't care how much oil you pump. If you can't produce into finished materials in time, you have a bottleneck, and that is going to take a lot of time to resolve, particularly if the growth aspects for the world are going to be good. It's going to have an impact on gold. The question is just when. I know we've been seeing that oil's been the trade of the alternative, but this is going to start putting some pent-up pressure on commodities. Some may feel that they've already been priced in a little bit for it, that they were way ahead of the game. Now it's they're just a little lagging. Interestingly enough, we'll just keep following it. So here's how the day went from the 5K. So here was what started from, and here you see our advanced algorithm. I can right-click it and just show you the GAM function. Mixed in here with the Deocon paint, and what it's showing are those pivots that I was talking to you about. And what's cool about those is that really you get an interesting reflection of, when something's taking place at a neutralized zone and all of a sudden you're seeing that you're actually getting additional pivots. Makes a difference. Now, when this pivot comes in, sure you got green over red, but you really don't have anything more than that. You're kind of in a neutralized setting here. Then you get orange spikes right above, right after it, and that gives it a little bit of a depressing decline. And then every time you get steel back above, you don't have green. It's not until green gets over red, which takes place right about here, and you're still maintaining steel above cyan and oranges below. That's your best kind of play right at that situation. You're still above the 23%. Not a whole lot. Now, you can certainly wait until you get a much more vibrant rotational move, which happened literally at the start of the gap up, and it wasn't a tremendous move, but again, even by the time you get to 50% all the way through, it was the same kind of readings going on, and then boom, cyan under red, and that was it. And that led to the beginning of everything. Well, as soon as that happened, though, you started to develop positive extremes. So positive extremes started right there at the very open of the bar there. The low of that was at 22.50. Well, okay, so fine. Now we know what the marker is for coming back. But as I warned when we were getting into this lofty territory at the very beginning of this, it's not that attractive to short when you get this magenta shakeout so far above the plus 15. It's usually just a massive continuation move, and what will happen is you'll get a lower shakeout or some effect like that, and they'll start to dip down, but that magenta being above there, by the time it breaks down, and in this particular case, perfect example of it, breaks down right when you're getting bullish equivalent dot readings. right at the bottom of it. And sure enough, you get what? That steel crossing, and I put this chart up there when it was happening. Steel crossing the red is a warning sign that, your short could be like in jeopardy just a little bit, so you got to be protective there. I would have thought that the earlier short on that would have been too soon, and then by then you're right at all the supports. So it's problematic. Sure, you can take the aggressive one when it pops in, and that first took place, it was right about here where you had the orange above the green moved below the red, and cyan above zero. Didn't quite have the steel contact on that one, but sure enough, it was right at the highest, and it did produce the best return because it filled in a bunch of the positives that had taken place right to the support line. But then no dip below the red line, and it started to carry out. So fast forward a little bit, you're at higher highs, lower shakeout, and you get the clear designation of it where, orange is spiking, green below red. In this particular case, you have a clear DOC spread in that particular case. Orange is, steel for short-term buyers have reset lower, so it's fine. It's not the greatest one. You want to see that cross, which is interesting because, again, right afterwards, you get that steel moving above red. Clearly ends that particular point of it. So if you follow this, it'll be critical because when you see that steel has come back above, when you get the cross back below, when you have the orange popping up, the cyan making a DOC spread move, this one becomes far more significant. Now, does it turn out to be at about the same price? Yeah. Do you avoid the push-up? Sure. Is it a problem if you were already in from here? No, not at all, because you had the continuation of the decay. It's below that 15 line. So, fine. If you're going to add to a situation, hey, that becomes an opportune spot. It actually started right up at the peak of it, which if we look at the differences, it would be more closer to the open. The signals were reading right around 29.40 versus this one closed at 39. You're not talking a big difference here. Maybe a point and a quarter. Making it up. And then it went sideways forever. And you're crying. And then you're particularly concerned right here because literally right after you're in there and boom, you get this steel crossing right at a pivotal time. So you've got to be like, defensive. Well, in this particular case, it becomes much easier to be defensive because you can still be up at your break even or at the high of the bar and be green, waiting to see how this transitions, because at the same time that happened, green moves below red, which if you're looking for positive activity, you would have expected the green and the steel to be moving in the same direction, sort of like they did here, where they were moving up and then began to fade a little bit, but that was that back and forth pattern action that happened before it finally ended up with cyan below red. In this particular case, we just move across more until you get just more of a cascade back and forth. It's just pretty much midterm and long-term buyers just faded out of it, and that started the gradual decline. Now, you would have been interested back down here when this first popped in right here. The problem you had there was shakeout below the negative 13.5, coming off a dip below the red line, so you expect that any move of this isn't going to be very long-lasting. And the critical aspect for this, to me, is right here, where you see green moving above cyan, and that becomes the critical one. In this particular case, still hasn't crossed. Next bar, boom, there it finally crosses above, but at the same time, orange spiked. So by the time you get the transition to it, boom, the very thing that's going to kill it will be that orange spiking above. You've already moved back to below where it was. So in this particular case, this is one of those where, to me, it becomes a great opportunity to add into a setup that's going to retest. At least we knew the low from there. It actually ends up making a lower low. But without a reset of the steel in this particular case, you know that any pop you get along this thing isn't going to do anything. So even when this one came, similar situation. As soon as it moves back below the negative 13, it's no longer coming from the bottom. It's back to the top side again. And similar situation. You're below the negative 13. Fine. You move out of it on the next bar. Okay, great. Oh, I got yellow already. Now, if I lower this one and we look at my original one, you're going to see all sorts of yellow dots that are going to pop up right here. Well, I don't want to be long going into the yellow dot configurations at that particular point, even though I've got the bullish side of the blue. So I'm thinking, okay, what have I got that's bullish in this particular case? Well, I got my orange is already shot right above green by the time I get to here, which means, okay, great. Kind of lost the momentum of that situation. The best you can hope for in this case then is getting green back over cyan, but that rejects right here, and you literally would be looking at that as an opportunity to add short right there at that rejection, because you're thinking, okay, I got shorts rising, longs falling. The problem you got with this one, and it usually causes you a little bit of heat, is that the orange isn't rising and steel not falling. Once you turn and get the orange going, that's when you end up with the strong move. That would be right here, right at the transition part. It's pretty much the same price, but the significance is you've got now green clearly below red, steel starting to fall, orange clearly rising, and already you have cyan above zero. So I'm just pointing these out, looking at it. It's one of those where sometimes a little bit of patience can play into it, or realizing that, hey, you're in a zone factor. If I get up to the 38, it becomes an interesting place to say, okay, I can be short on moves that go to the 38. Do I really want to be shorting down at the 23? Not so much, when every time I got down there, I'm bouncing back and forth on it. So it becomes helpful a little bit in that sense while you're waiting for some of the muck to clear up, because literally this was a pretty good battle taking place through a lot of this. They just couldn't get enough buy interest to get anything moving. And the fact you had the dip below the red line right here meant that you were likely to retrace this low. It was just a question of waiting for it. So, hey, from the 38% reading, which was at 30, and I'm looking for the zero at 22, I'm thinking, okay, yeah, even if I look for 80% of that, I got a 6-point move potentially built into this setup at that particular spot. If I'm looking at the 38, a little bit less if I was taking, the close of it. But still, boom, right to it, and then you end up with gold at the zero line. And you get the same. Now, look at this. You get a little bit better move here with this setup, because now your shakeout is above the negative 13 when that one comes in. Looks a little bit more interesting at that particular point, so I'm waiting for my pivot to see what happens with my orange for my first pivot. And look at that, the orange comes, pivots. Before I could even think about going long, it's already above green, and that's what's leading to the decay that's taking place right now. So very clean stuff, and what's going to be nice is that in the interaction with it and the pivots, the colors are just going to stay for the red, so you won't have to go through them. But I want you to understand when you're seeing what the dynamic between the relationship is taking place, and how that while it's always attractive to see that in the oversold characteristics, when your extreme is overdone, it's a warning to you that there really may not be a whole lot left. That doesn't mean that this still wasn't the buy. It just meant that, hey, as it started, you realized it was over early, and it was an opportunity to take your couple of points if you had it, or even a tick or two, and flip around and be ready for the next configuration. So I want that to be something that is active in your thought process when you're looking at these things. So I've gone along with it, but as always, though, trade well, and I will keep putting up charts as they are relevant. In fact, I'll go to the one that has the dots on it so you can get a look at what that looked like right there. Those are the dots, points it out very clearly, and as we were coming into the lows, the gray in that indicating that, hey, about to get a turnaround shot, and my little minus 20 that's always on there. So plain as day, as I like to say. We'll talk to you again tomorrow. Have a good Power Tuesday trading.